Welcome back, YouTube. In this video, I'm going to lay out a few scenarios and give my end of the year projections. This isn't an easy thing to do because right now there is so many different variables out there. So I'm going to lay like the pretense before that and give you the price points and some ranges as to where Bitcoin, Dogecoin can kind of fall basically based off of historic averages and statistics. So first off, I want to give the positive aspect to say that let's just say that the Fed pivots. Let's just say that we do not go into a recession or we have just a very light recession, something similar to what we had in 2020. And we have pretty much conquered inflation and all is well. And we are going to continue on our trend and wait for the Bitcoin halving. Late Q4, we conduct our averages and we start our ascend going into the next bull run for 2024. So let's use that data there. So when it comes down to Dogecoin, and let's just say that we are expecting to get the Twitter integration, all that kind of good stuff, the individual catalyst for Doge later this year. So the only areas that we'll have trouble with on the low end is after the 15 mark. We'll have it's a little bit based off his history, even with shorts and stuff. It's a little bit of a battle to get to around 20 cents. But after that, we're in the same time frame to get to as far as for gaps and the resistance levels. It kind of gets really, we'll need a lot of buying pressure at around like 25. So if we're looking, I'm talking about cent, by the way, just so there's no confusion. It's kind of like right now we're retesting like the 9.5 and we're seeing if we're going to build strength there. And after that, it's 11. And then after that, the next point is like 15. After that, it's like high 17s. And then it's 20. So those gaps, typically they get filled on the opposite side as well. So if we have a trickle of institutional money coming in, along with that catalyst saying that, hey, Doge is going to be for Twitter payments. And even if there is a Twitter coin, let's just say Doge is going to be, I don't know, a wraparound token, for example, something like that, where it's going to be redeemable. All that is positive news for Doge. That is any Twitter integration. There's no outside of not having our keys, which I don't think Elon Musk will do that. I don't think there's any negative catalyst for Doge being integrated with Twitter. So if we couple that with the natural movement of the market, again, perfect scenario, we are going to retest, I believe, a couple of those highs before the end of the year, because this is not saying that we're going to have a massive move from institutions and whatnot, but just kind of saying that we're going to kind of stay on the trajectory. I think that can easily put us in the 20 to 25 cent range by the end of the year. So, and again, this is not without like an injection or FOMO and stuff like that. That's coupling the Twitter integration with that trickle that comes in at the end of the year. And of course, in order to see that, we're going to have everyone's topic of discussion here, the face of the crypto market, Bitcoin. We're going to need to have that hit some certain numbers here as well. And for Bitcoin, we're going to be, because right now the topic of discussion is whether or not we're going to build support here and go hit that 25 mark, looking at roughly around 25.12. Then after that, we can talk about the 28 to 32 range. So obviously that'll put Bitcoin somewhere between 28 and 32,000 to finish the year. And I don't think that's a far stretch as far as for starting its ascend to the next bull run. So I think that range, if we're looking for institutional money to start coming back in and having that consolidation, I think that range will benefit crypto very well, especially the top 10. And I do believe that I don't think that this time around we're going to have a lot of the noise that we had with all of the new coins coming out. I could be wrong, but hopefully people don't buy into that this time around. The new coins that keep popping up and all the rug pulls and stuff. I would like to think that as a community, we're more educated this time, and we're not going to participate and have shiny object syndrome and start chasing these coins that popped up yesterday and the developer owns 80% of it. And as soon as you guys buy in, they start switching, bait and switch, and then they dump. So I hope that that doesn't happen this time around, and then people will invest more so into coins that have been through a few cycles, have withstood the test of time, and not just having shiny object syndrome and chasing that quick cash grab. And you won't have a lot of these ups and downs and this momentum swinging and all that kind of stuff everywhere. I said it before in previous videos. I do believe that in 5 to 10 years, most of the coins that you see now are not going to exist. I think that about over 90% of the coins, all the coins in totality of the 20,000 coins that's on record, are worthless. So this Twitter integration, because it's Dogecoin's received so much hate when it comes down to that whole thing about what's it's going to be used for, and it's a crap coin and all that kind of stuff like that. This Twitter integration is a staple in the legacy, the longevity, the usage, utility, all that good stuff for Doge. It eliminates all of that BS. So this is why it's a big deal and why you have to kind of count that into the momentum going into the coin. Because I made a video, I'm not going to get too far into it in this one, but it definitely pulls a lot of the liquidity from the exchanges, and a vast amount of those coins are never going to return to exchanges. So all of that helps add to the scarcity aspect. And then if we get, and if Twitter, we have this integration and it's used very proficiently, and we're able to attract other businesses, because I do believe that this next bull run, we're going to have a lot more businesses that are going to be interested in using crypto. And once we are able to work around and not have all these shocking headlines of like FTX and rug pulls and scandals and stuff like that, we're going to see major organizations move into the arena for accepting crypto for payments. And when you have coins that have been proven and work on systems at large scale, these are going to be the coins that's going to be adapted. And that puts Dogecoin in that topic of discussion, not just from the fees, but just from the sheer amount of people who actually have access to the coin and use the coin. Never forget that Dogecoin, I haven't seen the recent numbers, but never forget, at one point, 64% of all crypto wallets in existence contain some Dogecoin. So we're talking about literally one of the most popular coins on earth. So, and one of the most accessible, because anyone can own and hold Dogecoin and use Dogecoin. Bitcoin, if you weren't able to purchase it in pieces, it will be out of reach for like 99% of the population. So I think that these catalysts, the structure that's there is going to be able to propel these coins to these numbers by the end of the year, if we have the positive aspect. Now, let's get into the negative aspect. Let's say that we do go into a recession and Powell misses the the inflation, and or we overdid the basis point hikes, and we have that correction, and we fall into a recession. Housing market year over year, everything's terrible. Where does that put us if we have to fall and do our natural ascend at the end of the year versus contributing to like a higher high before then? So pretty much before then, we would have some support here, and it wouldn't do anything, I believe, shocking. It can put us at around like the 6 mark. And if we go into like a severe recession, and like, because you've seen some economists say we're going to have some like a Great Depression level recession or something like that, or the world's going to fall apart, or World War III or something like that. If we're talking about something that catastrophic, we're going to be probably retest something like around these 491 mark, or around this 5 cent, maybe even three. If we're talking about like a World War III or Great Depression or something like that, because at that point you're going to have a vacuum of not only institutional money come out of the market, but retailers as well. Because at that point, other things take priority versus investing for the next couple of years or whatever, until things kind of turn around, because again, the macros would have changed and people are going to want that liquidity, because not everyone's going to be able to hold through those extreme circumstances. And for Bitcoin, we've already done the numbers, but let's take a look here, because Bitcoin has never corrected, at least this cycle, its full 85%, right? So Bitcoin can technically go down to around 10 grand. And I don't even have to pull it up here on the chart. I've done the math a million times. We'll have some of the support here, like 15, 12, all that good stuff. But mathematically speaking, historically speaking, the 85% range that has been in place for about a decade now um, puts Bitcoin, I think it's like 10,300 or something like that. So, and obviously, if Bitcoin is at 10,300, which is over 50% down from where it is right now, I think you can imagine what Ethereum, Polkadot, Cardano, Doge, what all these other coins are going to look like. Now, again, the individual catalyst for Doge can certainly help it. So it may not see those extreme numbers that we saw, like the 4 and the 5 and stuff like that. Maybe we can have that little bit of a cushion, because if you look at, sorry, I keep flipping the charts, but look at what happened. We were at around like 5, 6 cent. And if you look at what happened when Elon purchased it, we went up to around like 15.89, but we never returned to these lows down here. These low 6s, 5s, and stuff like that, we never returned to those lows. Came close to around like the high 6s, but that was it. We never returned to those lows. So when you have these catalysts, it gives people time frames, it gives people reasons to hold on versus just saying, okay, well, I think one day something's going to happen. When you have these concrete time frames, it gives people a legitimate reason to hold on. So even if we have that extreme scenario of a World War III or whatever, um, you can have a certain amount of people who will hold on because you have that concrete catalyst there. And then just from the sheer fact of that DCA does work if you're holding something long term, and people are going to come in and take advantage of those low prices. So you have to factor all that in. So in a nutshell, Bitcoin on the high side, we're looking at 28, 32,000. Doge somewhere between I say 20, 25, unless shorts come in crazy at around the 17 to 20 range. That would be like, I guess, a second lower level. Low side, we're talking about 10.3 for BTC, and I say about 3 to high 5s for Doge if we get, again, some of those crazy scenarios. So if again, those things can obviously change. We can have, Elon could say, it's actually, we've already built the systems and it's going to be ready to go in 2 months. So that changes things. So it's just kind of have to just kind of play it by ear when it comes to those perspectives, and keep track of the macros, which is what I do here on this channel, and we get our projections here, and so that we can remain profitable. So those are my projections. Let me know what you think. Let me know what you think of your projections in the comment section. I'll read as many of them as I can and respond to them. Like the video, share it with a friend if you found value as we push for 50,000 subscribers. I appreciate all 42,000, like 680 of y'all roughly. I appreciate you guys for 2022. And we're going to do some great things in 2023 and certainly in 2024. Thank you. And I will see you in the next video.